Howdy everybody, in this video I'm going to show you how to make two different mean reversion strategies using strategy quant X, so you can basically make your own EA, your own trading robot that will trade without you having to do anything. So if that interests you, keep watching. If you just want to download the free robot that I'll make during this video, just check out the description and you can just download it and skip me showing you what to do. So first of all, I went to ChatGPT and just asked it, okay, can you give me some mean reversion strategies? And basically, here's a few. So we can do pairs, we can do Z-score, Bollinger Bands, RSI mean reversion, Connor sevens. There's loads of different strategies that can throw at you. For this video, I decided to do RSI mean reversion because I've already made one of these before. So that's your free EA you can find on my MT5 that already follows this. So why not just do it again, but make it a little bit different. And I'm also going to do the Connor 7 strategy. It's very interesting and I'm just curious to see how it works in the modern day, basically. So it's quite an old strategy. So we're going to run these two, but you could do any strategy following the process I'm going to show you. So we're going to go to Strategy Quant, we're going to go into Algo Wizards. Now, if you don't understand Strategy Quant, if you've never used it, go to my video specifically giving a tutorial on how to use it, and you'll learn everything you need to know from there. So I'm going to click New Strategy, I'm going to do Full Editor, Create Basic Template. I'm going to call this one RSI YouTube. There we go. So select. Now, first of all, we want to add in RSI. So here we go. And we're going to do a period of 2 because that's basically what's recommended within ChatGPT. Confirm, and we want this to be less than. So basically, it's going to buy when RSI goes below a certain point. So when RSI is low, let's say like 15, for example, when it's low, then that's signaling that the market is oversold, basically. So that's we'll use this for now, but we're going to use some machine learning to see if there's a better figure we can add in. And then for the exit, we'll do the same again. RSI, let's do it. And same period. And we'll pick a higher number. So let's say we'll pick 70. So this is where it's overbought and it could be a good time to exit. And for settings, we want to set for MetaTrader 5, that's what I use, but you can set it to whatever you need to do. If you use TradeStation and maybe multi-charts, you need to use slightly different shift, so just be aware about that. And we're going to do the S&P 500 because this is basically where you make money in mean reversion strategies, typically speaking. And we will we'll use the full data set. So we've got 25 years worth of data, so it's pretty nice data set to see if the strategy actually works. And we'll put it on the daily chart. So the reason we do daily is that daily isn't as affected by the spread, so our strategy isn't going to be affected so much by that. And then second of all, like there's less noise. Like anything can happen in 15-minute charts, but in the daily chart, the trend is pretty clear. So this is basically why I want to do it. This is a swing trade strategy. It's not a scalper by any means. So that's how it's set up, and literally just run a backtest already to see if it works. So yeah, already we can see it works. So I'm just going to note down a few things. It's 1.73 profit factor, and we're looking at about yearly return of 9.84%. So that's pretty decent. This said, like we probably want to see if we can make it a little bit safer. It technically would have died during COVID. So what you normally want to have is some sort of exit strategy. So we could try stop loss, but with swing trading, it makes more sense to have something like exit after bars. This is normally what you normally have. So let's see if we have something like 3, if it maybe makes it a little bit safer. It's not as good, it actually is much worse. So let's try maybe 10. And it still suffers a bit. So arguable if it's even worth having an exit after bars, to be quite honest with you. But let's see. Okay, that's not so bad. So the profit factor's a bit worse, but it's still suffering during 2020 period. But at the end of the day, you always want to have some sort of safety mechanism in case the market absolutely crashes. You want to know at least it's going to cut out after a number of bars if the conditions aren't met. But we will play with some things during this setup to see if we make it safer and we can stop it from crashing during COVID. But anyway, it's still a good sign. We've got a working strategy here. So we're going to save this. So this time we're going to create it as a template. So we're going to settings, advanced, and turn this on. And again, if you want to know more about all this stuff, I recommend you check out some of my other videos. And what we want to do now is play around with the figures we're using for RSI. So we want to make this, instead of this being a fixed number, we're going to generate it randomly. And we can use whatever we want, but it makes, I think, probably no lower than 5. and maximum of 40. We go 5, and we'll have this one generate randomly, and we'll have this as maybe minimum 40, maximum 95, and going up in 5. And for number of bars, we can have this at 0 in theory, although we don't want it at 0, do we? We want it really to as a minimum exit. So we can put this at 5, and then we'll put it down maybe 30 days, maybe 40 days exit. So it'll exit after a month. I think it's unlikely that's going to happen. I'll put it at 1. No, let's not put it at 1. Let's put it, yeah, maybe we should put it at 1. Because we can't put it as it has to be an odd number, basically. It can't be an even number. Go for 5. Go for 5. No, we're going to go for 1. We're going to go for 1. I decided. All right, so this is our template. Let's save this. So once you've got your template, you want to go to custom projects. And I've already saved a custom project for checking this out. So it's called RSI YouTube. But if you want to know how to make your own custom project, probably watch the video I'm going to tag above. It's a video where I've made an EA from start to finish, and I've shown every single part. But for saving a bit of time, I decided to use one I've already got. But I'll show you very quickly. So basically, it's going to be a build strategy. So it's going to build from the template that we're going to load. So we're going to find our template. Here we go. And in the template, we're going to test the S&P 500 for a 10-year period. We're going to use some of the data, but not all the data, including some of the, looks like the end of the, we'll put the COVID period in here, actually. We'll put this in, because it's the COVID period. I think it's 2019, 2020. So see if it can handle that period. And the rankings, we want a profit factor of 1.15. And we also want to see that it's making profit during the outer sample. So it's actually a little bit, we're trying to avoid overfitting, is in short what we're trying to achieve here. And once that's done, once it's done 400 strategies that fit that criteria, we're going to retest it on just the latest data, no outer sample data. And then we're going to retest it again on here, on the full data. And basically we're just going to try and find strategies that make more money. I am going to try and put, no, I'm going to remove this for now, but we are going to see if we can deal with the COVID issue a bit later. So we know this strategy is not going to do well through COVID. We've seen this already. And let's just see how it does. So here we are after maybe like 30 minutes of data. So we've got over 10,000 results now. And here's the option. So basically, we've got a few angles. We can go for a much higher profit factor. So this setup has a profit factor of 2.21, which is, I think our one before, let's have a quick look, was 1.69. So it's making more money basically. And we're looking at a yearly return of about 10% on the previous strategy. And for this, we are looking at, what we're looking at, let's have a quick look. So we're looking at something like 13% return, which definitely makes it more like, it's better than just having your money in S&P 500 basically, especially over a 25-year period. That said, it is quite weak during COVID especially. It would have totally blown the account. So what I'm going to look at instead is return to drawdown. So that's going to be probably better on the drawdown. And here we have this strategy here, which it still suffers during COVID, but it doesn't blow the account, and we still have quite a nice equity curve. Profit factor is still better than our original strategy as well. And this is making something around 13% per annum. So this is what we're going to use. So now we're going to save this. We're going to load this into our Algo Wizard again. So here we go. I'm going to do full template. So you can see now, the difference is basically now it's 10 and 95. That's the key thing. And X-Apps bar is 14. So now this is basically our EA. It's not bad. Like if you run the CA, it should make money. It's winning nearly 70% of the time. However, what we can look at is see if we can try and deal with this down period in 2020. And the way we can do that, as you might saw in some other videos, is we can look at adding an extra condition. So what I want to do is we're going to save this as a template again. So we're going to go to advanced settings, and we will see if we can add a regime factor that might help deal with the times where maybe it shouldn't be going long on the S&P 500. So we're going to add in a subchart. We're going to look on the weekly. I think the weekly is probably, could look at H4 as well, but I'm thinking in different minds here. Maybe H4. We're going to try H4, but I'm not 100% sure. We might also want to try weekly, but if we get a good result of H4, then we're going to use it. Here we go. We're going to load in new templates. And before we do anything, I want to specifically target time where there's COVID, basically. So what we're going to do on our final round of data, in fact, we can actually do it in the first part, but no, we'll do it in the second part. we're going to put a new outer sample, and we're just going to try and put it specifically during the period of COVID. So this period here, you can see the S&P 500 drops quite a bit, and there's a huge spike in ATR, like huge spike. So this period is basically the COVID meltdown. So we're going to see if we can get through that period with a profit. So that's what I'm going to put in here. So the outer sample will be at least 1.1 profit rating, which might be ambitious, but let's have a look. And we're going to have basically run a regime filter to allow that. Also, what we do need to do is make sure we have this filter in here. So we're going to add chart, we're going to add H4, and I'm going to do it for this one as well. Here we go. And let's see what it does. I'm just going to stop it here. We've got about 1,500 results. We could let this go for a long time, but at the end of the day, it's not a huge data set, so I'm not too worried about being too overfitted. And let's look at this equity chart. So we can see here it's a bit less violent during COVID. We can see also the ones with higher profit points. So let's say 2.35. I'm not so keen on that. So let's stick to the returns to drawdown. So this is somewhat healthy. The only thing you can say is that the number of trades, this is quite low, 107. So I'd actually rather pick the one with 142. Is it better? That's the thing. So let's have a look. So we've got 15.7 return versus what we had before, which was very similar. So we're gonna have a quick look at that. Okay, so what we had before was 13%. So it is basically making a better yearly return. The drawdown is similar. The number of trades is, let me have a look, slightly less. And profit factor 1.76 here, got 1.91 here. So this is objectively a better strategy. Does it fully handle the COVID? I'm not so convinced. So we will just see if we've got some better options here. I think this one looks actually quite nice. It does have a drawdown, but it's not anywhere near as violent as some of the other drawdowns. And this is, you got to keep in mind, this is one of the worst situations for the S&P in its whole history. And this is what happens. They obviously see a big down here during the tariffs, but overall, this EA is able to kind of handle it in the long term. But you got to accept that this is a somewhat high risk EA. There's no doubt about that. If you bought this and used it, and then the day after, 5 weeks later, you've got a huge drop in the market due to tariffs or COVID, then yeah, there can be some big consequences. So you've got to keep this in mind, but it's still more resilient than what we're seeing before. It's got higher profit rating, higher returns drawdown, it's got a higher yearly return. So I think this will do, I think, given that it is a mean reversion. So we're going to save this, and we'll also test this on MQL5 just to make sure it works in that environment too. So when you're on MQL5, one thing to do with this is you have to make sure the subchart is correct. So in this case, it needs to be SP 500, and the time frame needs to be H4, which it is already on. But it's just something to check out for if you're using SQL, like myself, using strategy quant basically. And in terms of what actually happened, the machine learning added average volume, basically. So it's basically saying the average volume on a H4 for 30 period is rising. So it's basically saying that the volume has to be increasing for a trade to be made. So if the volume is very low, then it suggests like it won't make the trade. So it's kind of quite interesting. It makes a lot of sense because it's basically saying that if RSI is low and it's still very low volume, then maybe it's going to go lower, basically. So it's kind of that's kind of how I see it anyway. So this makes logical sense why it's quite an interesting addition. If it's better to do it on the weekly chart, I'm not sure, but we're just going to run with it for now. And this is the MQL5 test, so MT5 test, sorry. And as you can see, if you got this strategy back in 2019, it was making money. It's got a high win rate. It doesn't trade super often, but it's on an upward trajectory. You can't really argue with this, can you? So if you look at the backtest results, it's got a profit factor of 1.82. So it's behaving very similar to what we're seeing on strategy quant. So that's quite nice. So we're done with this strategy. Now we're going to move on to the next one. If you just want to find out how to download this, you can skip towards the end of the video and I'll tell you about it. Now we're going to go in Algo Wizard and set up the Connor 7, which is basically a mean reversal, which is what I'm going to show you to close. It's first what you want to add in. You want it to be less than, or it's lower, and then the lowest. So show this. There we go. Period 6. This basically means after the 6th day. And then we're going to have close again. and close is greater than the SMA simple moving average for 200 days. And so explain what this actually means. So basically, on the daily chart, it's at the lowest point it has been in 6 days. And it's still above the SMA 200, so the moving average for the last 200 days. So the idea is, so the market's gone down, but overall the market's still going up. So the whole idea of this is just buying a dip. That's it, in simple terms. It's a very cool way of positioning that sort of trade. And then for the exits, we're gonna have close again. And we're gonna have close is greater than the highest. And again, we're gonna have 6. Great, so here it's basically gonna close once it's been 6 days and it's the highest it has been in 6 days. It's basically saying that, okay, it's the highest been in 6 days, it's been some like good market movement, let's get out of here now, basically. So that's the whole idea of this setup. And set the data, we have a MetaTrader 5, S&P 500. So let's just run the back test, let's see how it does. And already pretty nice. I mean, this is actually better than what we had with RSI. This is a bit more complex strategy, so it kind of makes sense. About 10% yearly return, which is probably a little bit better than what you'd have if you just kept money in the bank, but not by a huge amount, just keep that in mind. And yeah, so it's a very cool strategy. I'm imagining it's going to get nuked during COVID a little bit, but this is actually already a much nicer looking strategy. So in a way, I'm half tempted just to keep it as it is, because you can't really argue with this. It has 2 losing years. Yeah, 2 losing years. And it's losing right now in 2026, but this is an unfinished month, so we just don't know if that will remain as a loss or not. So this is already impressive strategy. And remember, this is an old strategy. They say, oh, like the market changes, like old strategies don't work anymore. But this is literally proof that a strategy that's been around a long time, that's not a secret, is still working in the S&P 500. So the question is, can we make it better? So what we're going to do, we're going to save this, and then we're going to make a template and play around one more time. Okay, so here's a template. We're going to have this on. We might want to add in maybe X after bars as a safety precaution. So we will put this in, but we'll have the option for it to be 0. We will allow that as an option. And we'll have it as 30, and we'll have this as 1. So after 30 days, it has to leave the position, basically. And we will have the lowest. So we'll put this as random as well. Now, I think we can put it as 2, 12, and 2. Okay, so we're not going to try too many variations. And the SMA will change this as well. And I think this is maybe where we'll get the most benefit, potentially. So we'll put the SMA at 10, let's say 400, and in movements of 10. Let's say movements of 5. Let's do that. Okay. And we'll also do the same with the highest. We'll do the same variation. So we're going to do 2, 12, 2. Cool. Great. So we're going to save that, and then we're going to test it in a very similar manner to what we did before. So in custom projects, I copied our last one. So I copied our RSI. I renamed it Connor 7s. And this is how you can save a lot of time, because it's already set up on S&P 500. We just got to change the template. So we can do Connor's template, and the data is as it needs to be. There's, yeah. So literally like this, we can just press start. That's how easy it can be once you've got these kind of templates made. This is the beauty of strategy quant, basically. So let's run for a few minutes. We've already got nearly 600 different results. I'm just going to pause it here because we don't need to overdo this. So let's see what we got here. So we've got profit factor up to 2.63. It actually trades more, which I quite like. So that's comparing to 1.87. So that's very interesting. We can also look at return to drawdown ratio as an alternative. And here we have a return to drawdown of 9.75. So it's actually very similar. So this strategy trades more, has a winning rate of 80%. So if we compare that with, let me see, if we compare that with this, the win ratio is 77%, so it's better win ratio. And yeah, profit factor's better, drawdown can be 15%, so you need to check it out, but it's got an average daily return which is higher. Let's check the drawdowns. So drawdown is lower for this one. So this is something you got to keep in mind. The drawdown is higher in this case, but it's generally, I mean, it only has 2 losing years. and it doesn't even lose during COVID. It actually seems to do quite well during COVID for some reason. So I don't see that here, do we? 2020. Let's have a look. So yeah, I think it's because it goes as drawdown, but it doesn't lose. There is this big loss here though. So it does have a big loss in COVID, so it just makes up for it later. So that's something we've got to be a little bit concerned about, and that's probably the biggest part of the drawdown is these two big losses here, which basically account for most of the drawdown. So we'll use this. It is better overall, but we do want to try and work on it in some way to help with these big events where there's a huge loss, because no one wants to have that. These black swan events do happen, but we need to try and find a way to mitigate how dangerous they can be. So we're going to save this and have a play around with it. So here it is. So it works a little bit differently. Basically, it goes in the lower set of 4 days. It uses the SMA 40 instead of 200. So it's basically the last 40 days moving average. And it's got the same exit. And it doesn't use any exit in terms of number of bars, which I understand it's not optimal. However, I appreciate not everyone wants to have an exit that works like this. But this is a proper exit. It is a stop loss. Like, this will happen eventually. It's guaranteed to happen. So it's would you have this as your only strategy? I'd highly recommend not. But as you saw from the actual backtest, it's actually not that unsafe. There are losses, but nothing that's catastrophic. But we're still going to try and work on this. So what can we do about it? One thing is we're going to add a random condition. So we will put this to advanced. Close. I'm going to add our first random condition. We're going to do it from the weekly chart this time. So I feel I made a mistake last time in my other ones. Let's do weekly. We'll select weekly. Cool. And that's all. That's all we're going to do. So we're going to save this. I'm going to try it again, but with this new condition. Okay, so back to project. We're going to load the, let me see. We're going to load the new template. And one other thing we're going to do as well, we're going to add, just like we did in the first time, we're going to add a outer sample here. So we're going to practice an outer sample during the COVID periods specifically, because we want to see if we can minimize the drawdown in this period. So here we go. And what we're going to do, we're going to probably rank it on profit factor, but there are other better probably ways to do it. But just to save time, is what we're going to do. And let's just see what it does. All right, so I'm going to stop it there. You could, again, run this for probably weeks to try different things. But yeah, we have this very interesting result here where we need basically the whole, like, there's just no major drawdowns at all. It's super interesting. But the question is it seems to always be an equity point that's below the balance. So it's a little bit strange. So we need to test this to see if there's something weird going on here. But as you can see, by making some changes, we've got a much stronger equity curve here. And yeah, so we've got some interesting ones to go through, but I think this is a one I'm going to run with. It's got a good number of trades. We've removed any of the issues around COVID. It's nearly too good to be true. So when it's something too good to be true, you want to test it in MQL5 to see what's actually going on here. So that's what we're going to do next. And here's a strategy to see. So basically what is happening is that when the weekly ATR over 50-week period is dropping, then it's allowed to make the trade. So it's basically, it must be somehow avoiding certain market conditions through this. If the ATR is falling rather than rising, then it means the market's becoming more calm. Which is sometimes actually a good time to buy in theory, because it's basically, there's an old saying which is you don't short a calm market, a slow market. And if the day traders will maybe know what I mean by this. So it seems to work in terms of at least on strat quant, but let's see how it works in MQL5 as mentioned. All right, so I tried it on MT5 and look at this. I mean, look at that for an equity curve. It's struggling. I mean, it's just generally doing well. It's had a bit of a drop in maybe towards the end of 2025, and it hasn't quite recovered yet in 2026, but it's yeah, I mean, you can't really argue with this. So I think we'll call it a day for this one as well. There's more things we could do, but I think that's a pretty cool EA, especially for a free EA. And yeah, so this is a quick overview. One thing we will do very quickly is we're just going to see how this works in other markets. So can we see if this works, let's say on NASDAQ? So let's just try this very quickly. So I think this is important to see. Works on NASDAQ, it's profitable at least, has a big drawdown here, so it probably needs a bit of, you want to be a little bit careful using it on NASDAQ by the looks of it. Let's see if we can use it on gold. I'd be surprised if it works in gold, but let's see. No, so don't use it in gold. I think obviously gold isn't... Gold mean reversal can work, but I don't think these strategies are ideal for it. You'd have to use a different setup. We can try the Dow. So see how it's in the Dow. Here the Dow, again, it's a bit choppy. You've got to be careful, but it's a winning strategy, once again. So yeah, I think let's try it on 1-4x. I'm severely doubt it's going to work on 4x due to the nature of 4x. But let's try this one more. Let's try this one as well. Yeah, so don't try this on 4x, but on the US indices, we'll maybe try DAX if we have the data. No, we don't. We can try maybe the Australian stock market as our last ditch attempt. Yeah, it works in Australian stock market as well. So you could probably have this on a few different markets and give it a go. Do it at your own risk, and I'm just going to show you now where you can find these for free. So if you want to try any of these strategies, you can find them on MQL5. You can find them on my profile. So I'll put the link in the description below. Included in this is all the backtests, a bit more information about the EAs, and you can just play around with it yourself. The description's as honest as it can be. It explains exactly what it does. And if you've got any questions, let me know in the comments. Let me know what you think. And if you want more EAs, just let me know. Maybe I can make it some weekend. Cheers. Ciao.